What is your perspective right now with the tariffs and everything going on? Are you being a little more cautious?
It is crazy. So, we're basically spread based. And so the interest rates are obviously whipping around. Look, it has to pencil for the client. You can't just take unlimited interest rate risk. And so some deals are going to be pushed out. They're going to wait. Some people are going to wait on the sidelines a little bit. I think that's actually very, very normal. You got to let some of the volatility settle.
Welcome back to another episode of Simple Chat. I'm your host, Janine Cascio, the CEO of Simple Lending Financial. Today, we have a very special guest with us, such a woman powerhouse leader within the private lending space, someone I look up to very much, has taken the time. Beth O'Brien, thank you so much for being on my podcast.
Oh, Janine, I'm so excited. I've been looking forward to it all day.
Yeah.
It kind of shows you what my hobbies are, but um,
Who is
I'm
Beth
pretty excited.
O'Brien? For our audience that doesn't know who you are, like who is Beth?
So who is Beth? I'm a whole bunch of different things, but I think if we were going to focus on private lending for a minute, I've actually started three different private lenders over kind of the past 12 years. I started with a company called Auction Finance, which was really just fix and flip and just to finance people who were buying at auction back when that was really becoming the trend. I moved from that into starting Colony American Finance, which became CoreVest. And then after the I sold that and worked through a few years of that, I have started yet another private lender. You would say I should come up with something else to do, but apparently this is what I like and this is what I know how to do. So I'm now the founder and CEO of Encore Finance, which has been around now for just over a year and a half.
Very cool. Wow. It's only a year and a half that you've had Encore? That's wild. Because you're
Yeah, it's kind of
opening
crazy.
multiple locations, right?
Yes, we are in multiple locations and we do lend basically across the country, most states, not every single state, but the majority of states that have single family rentals or investment properties in them.
Very cool, Beth. For someone who's, growing and scaling at the, you know, pace you are now, you're only a year and a half in with Encore. Like, what would be like a piece of advice with someone who wants to grow as fast as you are right now?
Yeah, I'm not sure that speed is a goal in and of itself. I think you have to be actually a little bit careful of that. But the key is, are you solving the needs your client has? And if you're putting together the package that you need for your clients, I think actually, and you have the right strategy and the right capital source, you will just naturally grow because your clients' needs will continue to grow. And if your strategy is correct and your capital source is correct, it's kind of those are the two pieces that I often stress with people. You got to have both. You can have a perfect strategy, but a bad cost of capital, you're not going to get there. Or you can have amazing capital, but not really know what you're doing with the clients, you're still not going to get there. It's really a combination of the two things.
Yeah, and if someone's trying to locate that, like, they're really trying to ramp up their private lending company, and trying to locate that good capital. And capital is one of the biggest struggles of becoming.
Look, even people that have been doing this for years and years are spending some portion of every day on that. It
Yeah.
does not go away. And as you know from the past couple of weeks, my goodness, the market does change dramatically
Mhm.
almost every day lately, but certainly over time, it's never going to be the same exact market. It's never going to be
Yeah.
exactly the same capital. And so you do have to constantly pivot and have more than one pipe open.
Yeah, for sure. So more than one source of capital, you're saying, just in case
So
something like
yeah, more than one, although everybody has to start with
yeah.
one. Clearly you have to start with one. I would say the thing to really focus on if you're looking for capital is focus on the asset. So if I can generate a very positive risk return, a decent risk return on a quality asset, I will be able to find the capital.
Hmm.
I think sometimes people make the mistake of trying to find the capital first with something that's more hypothetical, and that it does require kind of starting out smaller and figuring out what is it that I can develop in track record. Not everyone starts a brand new company like I did a year and a half ago with track record.
Yeah.
Right. So to suggest that everybody should be able to scale on that level in a year and a half is kind of crazy because the track record is actually
That's
really
only
important.
a Beth O'Brien thing.
Well, I don't know that. No, it's not just me. I mean, there are plenty of other people in the market who have been starting some. There's actually, a handful of brand new lenders who
Mhm.
are veterans of the space in the past year, all of whom are scaling very, very well. Like CV3, Ascent
Yeah.
Developer Solutions, Encore. But I would say what the three have in common because they're very different strategies,
Yeah.
is track record. And so the three of it, so you don't have to have the
And
identical
track
strategy.
record meaning like their origination's already there. They have that portion of the
Yeah,
company.
people know what the assets are going to look like,
Yeah.
right? It's not a blind pool. You're not just like putting capital against the hypothetical that Beth might generate an asset.
Hmm.
They have a pretty good understanding of what type of asset Beth might generate.
Yeah. Love it. Now curving the conversation a little bit, but when things like the tariffs happen, or maybe one source of your capital, anyone that's been in the industry, 2008 or COVID, and a source of their capital pulls back, or things are just tough in general. Being
I'm kind of tired of hearing the expression unprecedented times. Like that every month now we have an unprecedented time. Yeah.
But what,
That's why eventually you need more than one source because
yeah.
you are going to have people pull back. I mean, COVID was complicated. We
And
all came
how do
out of
you
it.
navigate that though, Beth? My question is kind of like, how are you navigate, like, what would your advice be for people that maybe have more of that like panic mode of like just digging a little deeper of like what people could do to avoid that?
So I think one of the most important things, depending on how you finance yourself,
Hmm.
one of the things that has been very helpful in times of stress is to not have what they call mark to market lines. You really want to make sure that whoever's financing you or whoever's backing you is also going to be solid through the turmoil. Now, no one is perfect through turmoil, right? They are actually unprecedented times or, a little overused, but you can set yourself up so that you're not getting constant capital calls. But also sometimes it's just you have to pause.
Yeah.
You can't always lend through every blip, although you want to make sure that you're funding your key clients. You want to, certainly during COVID, we really ring fenced and made sure we didn't stop funding people, particularly on bridge lines. But we were very cautious. We were not taking new clients for a short period of time because it wasn't 100% clear the capital was going to be there
Mhm.
during that period of time.
And
Now,
how are
luckily,
you
that came
feeling
back really
now?
well.
Like, what is your perspective right now with the tariffs and everything going on? Are you being a little more cautious?
It is crazy. So, we're basically spread based. And so the interest rates are obviously whipping around. Look, it has to pencil for the client. You can't just take unlimited interest rate risk. And so some deals are going to be pushed out. They're going to wait. Some people are going to wait on the sidelines a little bit. I think that's actually very, very normal.
Yeah.
Um, you got to let some of the volatility settle. The truth is you can actually lend at any interest rate environment.
Hmm.
It just has to pencil. It may be a different LTV. It may be different. The volatility, though, is what really is slowing down the market, not necessarily even the total rate, because you can be wrong 6 months from now. You
Yeah.
can't be wrong next week on what you did. Like you can't, everybody's afraid that you're going to come up with some number today and then, be wrong next week already or tomorrow, for goodness sakes.
Hmm. Are you overpricing right now? Just because I spoke with Eric from Rock Capital and he was just, even at NPLA, he was very vocal about being overpriced. He's like, I'm going to be expensive just because it is so
Well,
volatile.
it's a risk premium. I mean,
Yeah.
I would say that he's probably not expensive. It's just that it's a risk premium he needs to
Okay.
charge because he's taking the risk during that period of time.
Mhm.
It kind of depends on who's taking the risk. I don't feel like we're overcharging. We're sticking to we're probably one of the few people who haven't moved our rate sheet, but like I said, we're spread based. And so the base rate has been moving, which does affect the overall cost.
Cool.
But you don't have to close until you come up with a number that's appropriate.
Mhm.
Now, I did hear some people are not locking. We're still taking rate locks, and because of the way we hedge and stuff. I mean, I think it just depends on, again, what your source of capital is and can you rate lock in this environment.
Okay. Very cool. Thank you for sharing that. So going back to your entrepreneur journey, do you ever come to a point of like, things are tough and it's kind of like you have to go back to your purpose and your why, and you're like, why am I doing all of this?
Oh
Like,
yeah,
why
definitely,
am I
definitely.
round three of in the private lending space?
It
So,
is actually,
it's
it is harder than people think it is. Maybe it doesn't look that hard, but it is actually, it's hard every day
Mhm.
because you have a lot of, I mean, well, my why is I think it started evolving when I was at Goldman on the other side. So I worked in the real estate principal area where it was a PE, but we were actually funding other companies and investors and stuff. And I realized I didn't really want to like, if you realize that you don't want the job above you,
Mhm.
you're like, wait a second, something is wrong here. Like, I don't want to be a partner at Goldman Sachs, which is a pretty fantastic job. I'm not suggesting it would be a bad job, but it wasn't the one that was going to be making me excited. I wanted to be a partner of Goldman. I wanted to be the one they were funding, or somebody was
That's how
funding.
I
Like,
felt when I was in school for accounting. I was like, I actually don't want to do that.
it wasn't a bad thing. I mean, it's a fantastic job. I mean, I loved the transactional nature, right? Which is what drew me to it in the first place. Like people go into finance or law or whatever because they love transactions. And I was incredibly transactional. But all of a sudden, it became apparent to me that what was giving me satisfaction was not the transaction anymore, but building,
Love
which
it.
is a very different skill set. And once you realize that, you have to kind of pivot as to how do I become the builder and not just the transactor. Again, not saying anything negative about the transactional life because it's a very fast-paced, interesting career choice. And by the way, as you know from lending, it's very transactional. There
Yeah.
are 100 jobs here that they better be focused on transactional.
Yeah.
We're not going to get any loans. But my job is not actually that transactional anymore. It
Mhm.
is part of the building. And that's where I'm kind of getting my why, if that makes sense.
100% makes sense.
And I evolved from that. Other people never change from that because it is what they want to do. And some people evolve to that.
Yeah.
It's not that one is better or worse than the other.
Very cool. Thank you
At
for
least with transactions, though, if you don't like the one you're working on, you can move on to the next one. This is a little all-consuming.
I love it. So, what would be your advice? I mean, you're just a year and a half into Encore, but if, going back to anyone like myself, new as a CEO position, like what would be your advice just starting out?
So I think one of the things that was really helpful to me in the last company that I built, where we kind of grew from me being employee number one to over several hundred employees, was that each stage that you kind of break a little bit. And I don't mean that in a bad way, but you have to be like open to that and not think that that's
Almost
a
open
failure.
to failure in a sense of
Yeah,
like,
and I don't even want to call it
yeah,
failure, although I think that that's kind of the cliche way of thinking about it. But you have to be open to these breaks. And one of the things that was really helpful, I don't know if you've ever read the book Blitzscaling. It's Reid Hoffman, the guy who started LinkedIn, and it
oh yeah,
really it's kind of it's tech industry centered, but there were a couple of things in there that really resonated for me. He actually it came out of a class he taught at Stanford, I think, and I had actually gotten the original PowerPoint. So like when you start, and I'm sure this is going to resonate for you, when you start a company, it's a family. And
Mhm.
then it becomes, and there's certain like attributes within a family that actually kind of ring true in your early stage company, like positive and negative. We don't have to give into all of them. But then you move from family into village.
Mhm.
And in a village, people are still kind of doing a lot of each other's tasks and things are happening. But eventually you have to move from village to town where there's some rules. And
Mhm.
you got to start having some, like if you're going to scale, you're going to have these like swim lanes and people are, and you go from like village to town to like city. And it has this whole like progression.
Yeah.
And it basically, it was what was interesting to me is that a lot of these progressions happened at about the right number of employees that he was saying, like something happens at 50 employees that is very different than at 25 employees. And then again at 100, or there's these normal breakpoints, and each organization is going to have a slightly different threshold, but that it's okay to realize, oh my gosh, we're not really a village anymore, and I need more rules. I'm not betraying my entrepreneurial roots now that I want to have rules because I cannot scale from here if I'm doing the things that I was doing when we were a family.
Got it.
I actually need the village to work, and then I need it to be, and eventually, like it depends on your goals. I mean, not everybody wants to run a city,
Yeah.
and maybe that's too big a company for some
Yeah.
parts of private lending,
For sure.
but there really are very different rules at each one. And his point was more that things will happen at those levels that make you feel like it's breaking the organization, and that's a good sign that it's time for the next scale.
Yeah.
Not that you've done it wrong. Now, hopefully it's not a control break. You don't like send money out the door or something. But I found it kind of freeing.
Yeah.
that I didn't have to have it be perfect along the way every time. Like I was allowed to have these various
Yeah.
stages. And it actually helped me a lot with building the culture with the employees too. Because I don't know if you have the same thing, but I would say something about what I thought should happen. And then everybody would like run and do that when all I was trying to do was get a little dialogue around what
Yeah.
should happen. Right? Like you forget what your title is and that people are actually
Yeah.
going to possibly even respond to what you're saying.
Mhm.
But what it enabled me, like it made me realize what I needed to tell people was just because I'm telling you we should consider doing it this way now does not mean I thought you were doing it the wrong way yesterday. I just think we've now evolved or we need the next level. And
Wow.
it's not about bureaucracy. It's about kind of hitting that next stage, which is actually a town now. And so it has to have, a curfew or whatever.
Yeah, that is a beautiful message. I very much resonate with that. And I love that takeaway and that version. So thank you for painting that picture for
Yeah.
us and the audience.
Yeah, I'm sure I'm messing it up for him the way that he intended it to be, but that's how I took it.
I love it. Yeah, so so happy that you've been on this podcast. We do try and keep this short, but I could talk to you forever. So thank you, Beth. But what would be your one, biggest key and to leave our audience here with the biggest key for you for your success?
To just be prepared,
Yeah.
right? And not worry about like being too linear about it. Everybody has to have goals but I found that you're more successful if you react to the environment and you build on what you're doing rather than have this ridiculous fixated goal that I think that you become too focused on it. You're going to miss kind of the opportunity along the way. Just you need to be flexible and be open to what is the opportunity in front of you. And it's going to change because the market changes, or it's going to change because the employee base is a little different and they have different skill sets than the last employee base, or whatever it is that you need to be a little more flexible around your capital. You can have all kinds of different, I've been funded by a lot of different people, thankfully. But each of them has had their own needs, and you have to be flexible and figure out what that is. If you're so focused
Mhm.
on what you think it has to be like, you're probably going to miss the big opportunity.
Wow. Yeah, that's very well said. Thank you. So Beth, where can people find you? Where can people connect with you? You are active on LinkedIn, but where else?
Yeah, I like LinkedIn. People can just email me or reach out to me. I'm pretty accessible. I go to more conferences than I probably should, but I also really love meeting people in person. I think there's no substitute to the one-on-one. I really do like that. And people energize me. So don't be afraid to come say hi. I actually really would probably like to meet you.
Awesome. Thank you again for tuning in to this
Yeah.
episode of Simple Chat.
Thank you so much, Janine. Really appreciate it.